Good evening, guys. Today is March 13, Friday, and it's time again to talk about market and our position, our portfolio. Uh, you can see here the market is continue going down and it's already lost more than 10% from the top, and our portfolio is in good shape. Why? Because you can see here it's a VIX. VIX dropped down last 3, even 4 days from maximum of 29. Right now it's around 22, and just for last 3 days our portfolio bounced up approximately 6-7%. This is how important volatility is for our strategy. It's actually important for any income generating strategy which use options, because all income generating strategies has a negative vega. So we were at the beginning of this week approximately 5-6% minus from beginning of this year, but today we are actually about zero. It's where we were at January 1st. Even market declined so much. So this is how our strategy works. It's good. But again, it's very good days for this week, because volatility crashed down. It's still very high at 22, but it's much less than 30, and our portfolio improved a lot. So now let's talk about our portfolio. So this is how our portfolio with ES or options or for ES futures look like altogether right now. It's not bad. We actually did lots of work for adjusting our position during market fall down. We had to, as we usually do, roll down our naked puts when they reach delta 20 or higher, and pay for that by reducing or removing our hedges. So right now it's not too many hedges left. I believe that for whole portfolio we have a couple of just hedges left, plus another two which we add just yesterday. One of them yesterday, one of them today. Let's see each of our position individually. First, our balalaika trade. This is how it's look like today. After today's volatility decrease and market went up, so it's up to profit. Our closest naked put is at 47 DTE, and at delta 15 right now, 15.5. It was actually time to roll it down yesterday when it was more than 20, but we decided to hold it till today, and we did right thing. We didn't touch it because today market bounced up. So, and the second one, second naked put is at 77 DTE. We had to roll it so far previous time when market fall down and we didn't have much choice. But right now it's a perfect spot. It's delta 9.4. So it's safe for now. We don't know how market gonna react and behave next week. I am pretty sure that we will continue probably we probably gonna have another leg down for sure. After some bounce up, it's time for bounce up because market did down more than 10% virtually without any correction. So I expecting that it will be some kind of correction and maybe sideways action, and after that maybe it will go down, but at least I expecting that it will test the low and maybe even go lower. We don't know. So the next trade, um, let me see. By the way, we had a ladder D which we closed yesterday completely with small loss. Let's see what we have right now. We have three income positions. Income one, which is right now at delta 11.5, not too bad. Income two is at 77 DTE, so again, because market dropped down so much, we had to roll them out so far. We usually don't do that. We're trying to keep them at 60 DTE or less, but we had to go far to compensate for our roll. So right now it's also 11.5, and income 3 is 63 days till expiration, and at delta 12.8. Also we have three hedges, CDH1, CDH2 and CDH3. So CDH1 still have potential to use for next roll because it has a negative 9.4 delta, and you see that it's pretty profitable, and we already move some get some profit from it and lift up that tail line, so it's already impossible to lose from that trade. And right now it shows 3,300 in profit, and because it still has negative delta potential, so if market continue go down, we can use it partially or completely to pay for our next roll if it's necessary. Unfortunately, CDH2 and CDH3 we already used completely, and it's already you can see it here. This is CDH2. It's also not loose trade, but delta is just minus 1.5, so it's not a good hedge anymore because we use it already. But we're gonna keep it because it's still, if market continue to go down, it won't give us big profit, which we can use again to roll our naked puts, but at least it won't lose for sure. So we're gonna keep it, but we shouldn't count on it as a hedge anymore. And CDH3, let's see here, CDH3 a little bit better. It's has delta minus 6.5. You can see here on the graph. It's also in profit, and our tail line close to zero, so probably we won't lose from that trade even if market go much higher than today. And it still has potential. We probably gonna use at least one roll to get profit from it if market go down, to pay for our roll. So what else we have? When we yesterday closed our D ladder, we still have pretty good hedge there left, which we keep it for future use. Let me see where it is. Yeah, it's 108 days till expiration, and our vertical hedge as a hedge with long at delta 12.3, so it's pretty good spot. So it's kind of expensive hedge, so we definitely can use and probably gonna use it the first next time if we need it. So what else do we have here? Let me see. We have Kazoo strategy, which is we also did lots of rolls, and some of them unfortunately already in position that probably we're not gonna get any profit from it, but we're playing just to get at break even. So this one is Kazoo 3. You can see that it's in 1400 loss. Fortunately, we compensate that loss with profit from our hedges, but still, if we're talking about that just this strategy, so we probably gonna play just to get at break even. Right now we have a shorts at 47 days till expiration at delta 10, so it's not bad. It's Kazoo 3. We also has Kazoo 3 small. It's approximately the same. Our loss approximately $1,000 right now, and we're trying to reduce our loss in the future. We will see. What else we have? We have Kazoo 4. Also, we did roll, and now we're just trying to play it at break even. Our shorts at 63 days till expiration at delta 10, which is pretty good spot. We will see. Maybe we'll play it and get that money back. Kazoo 4 small, approximately the same thing. It's about $900 in loss. This is how it look like. And we have Kazoo 5. Kazoo 5. This is in better shape. At least we can play it for profit. Our short puts at 47 DTE at delta 13.5. This is how it look like. And Kazoo 5 small is approximately the same, looking at the same. So it's in small plus right now, and we also hope at least this tranche we will make some money. If others, we will just play to break even for now. Also, we have couple of violin position, violin 9 and violin 10. Violin 9, finally we got close to break even after that huge market decline. So right now it's just a $370 minus. We did also a couple of rolls. Right now the short is 63 DTEs. We had to roll them out, and delta 10. So we will see if market will continue to decline. Probably all of them will continue to lose, but because we add some hedges, at least we will compensate that losses with profit from hedges. Plus theta is working in our favor, so we will see how it's gonna will play out. And violin 10, it is in profit right now, about $1,000, just because we probably opened it not long ago. It's just 8 days, so after that volatility at least didn't increase. This is why this position in profit. Our short puts also at 63 DTE at delta 9.2, which is good. And I hope that we will make some money from it. Also, we open hedges one yesterday, and today we add to it. It's a ratio hedge. This is how it's look like. This is how we reduce delta of our portfolio after today's run up. Yes, it is in loss, about $1,200, but it's not a problem, guys, because it's manageable. Next week we will see if market will not decline. We roll down our longs and lift up that tail line and try to make this position still as a hedge, but not losing from upside. And also we yesterday opened Violin Mini, and I would like to talk about that strategy and this position a little bit more, because guys, my plan in this year with this economic and political environment, because I'm expecting that market will be quite volatile and probably movement of downside will be much more often than it was before, to start using that strategy much more often, because it's much safer. We use here long-term delta hedge, which is 168 days today. So when I open it, it was yesterday, 169, yes. And we, against that delta hedge, just sell just one naked put, which is 47 days till expiration. And plan is after, if that 47 DTE naked put will expire, our delta hedge will be free of charge, because that naked put completely pay out for that hedge, and we're gonna keep it for our portfolio in case that markets start declining, and we're gonna protect our portfolio with this structure. So I plan to use it much more often this year. That's it about ES. Let's see how our MES strategy look like. Also very interesting and very successful. We did some adjustments this week. You can see this. We have for MES strategy 2 different expirations. One of them just 7 days left, and unfortunately you can see that today, after market run up, it's dropped a lot of profit because it's very negative delta. But we keep that position in purpose, just because it's protecting very well our longer expiration position, which is 47 DTE. This is how it's look like now. After today's run up, it's get some profit, and if we check them together, they are together in pretty good profit, approximately $1,200. I just would like to remind that it's in OptionNet Explorer. They don't have data for micro ES options, so we have to use it and model it in a regular ES position, ES futures. So we just need to divide that number by 10. So profit is not 12,000; it's just 1,200. This is how it's look like together. And this week we did an adjustment after market decline. We rolled down one of our long, and also we reduce our position of shorter term expiration to get some credit, big credit from that, and pay for a roll of our naked puts. We did move it here to right now at delta 13, but it was about at delta 20, so we increased that tent, profit tent, and now it's much safer, and we will see how it's gonna perform. If it's continue to go down, we will do the same thing. Our protective puts, long puts, one of them already in the money, another one close to in the money. So if market continue to go down, they will cost a lot of credits. So we will roll them down again and use that credit to roll down our short puts, three of them, three here at delta 17 right now and three at delta 13. So it's position pretty safe. I don't worry about it much. Plus it's micro S, so even we will assign, which we actually have to be prepared for that. It will be okay because it's small. Micro S, it's small position, so we don't need to worry much about that. Also about TLT, we continue to make good profit. So you see that the closest expiration just 7 days, and market went up, and now it's went down again. So we're close to maximum profit. So we will continue to hold it until it will be expired. One of them, because both of them at the same strike, our short calls and short puts, both of them when expired. One of them for sure will be in the money, so we will not probably get that assignment. We will just roll that in the money options out and sell against them another options. If we will be assigned with calls, we will sell. We roll that calls and sell puts. If we will assign with puts, we will roll that puts and open new calls. So this is how we plan to play it. So you see that this position is pretty good profit. So also we have oil position. We did roll, I believe, last week, and you see that even oil is at the lowest level. It's below previous range, but our position, it's in small profit. So this is how it's work. Our short puts is pretty far at 55 strikes, so right now we're at 66, so I doubt that we're gonna go so low. So we'll continue to make some profit, and I hope that we will get above our tail profit line. So maybe, as usual, we're expecting from this position approximately $500 in profit. So I'm pretty sure that we're gonna get this profit. Yes. What else? We have some stocks positions, which again, sorry guys, I wouldn't like. I promise you to make that course about stocks, but I'm delaying that not just because I'm busy. Just I think it's not right time. Everybody, I mean you, pretty busy right now to adjusting your ES positions, and probably you max with your buying power anyway. So I delay that course, and but be patient. I will do that course, and you will like it, I'm pretty sure. So we will virtually do trade stocks approximately the same way how we trade our TLT, with some nuances. which we will discuss, and after that we will in details discuss our stock positions. Right now we are in pretty good shape, especially after today's market bounce up. I don't think we have some big problems there. Somewhere around probably zero. We had issue with XOP after huge decline of this ETF, but now it's bounced up and we are in not too bad shape. So it's still in negative, but I'm pretty sure that after a couple of rolls we did adjustments. Now we are in good shape and we will sooner or later make profit from that position. So what else we have? We have an Amazon position, not too big, and it's also close to zero. I believe CRM, if we have it, I don't remember, do we have CRM position or not? If we do, because I have it in my personal account, it's it was nasty move down yesterday, but today's bounce up, but it's still in loss. But again, I hope that sooner or later we will get out of that. I just would like to say, guys, all that short puts which we sell in our stocks position, I would like that you will mentally treat it as a long stocks position. This way you will be a little bit more happier, because when we sell puts, it's mean that we virtually own that stocks at strike minus premium which we get for that put. So usually it is at a good price level, so it's not too bad, and we sell calls against that. So sooner or later we will be in profit, because we're trying to choose very solid companies, and they are all of them right now at very, in my opinion, at very good price level. We don't know how our market will behave, but our positions, our companies is pretty good, and I'm pretty sure sooner or later they will bounce up and go up to their highs. What else we have? I believe we opened Nvidia also a couple of days ago, and it's in good profit now. Not good profit, but it's approximately $200 in profit for a couple of days. It's not too bad. Google also, I believe it's around zero. So stocks so far it's not bad, and it won't be active trading. I will try to. We are pretty busy with ES positions, so all stock positions probably gonna be in 3 months, about 90, 100 days DTE position, that we will give them room and time to play out and bring us some profit. But if not, we will adjust it and delay that profit a little bit longer. But again, I'm pretty sure that sooner or later, at least we will play them to break even, some of them, and most of them it will be in profit. Okay, guys, thank you very much for today. I have a good weekend and good night, and be safe and keep your Greeks under control. So don't forget that if you do nothing when market decline and your portfolio delta get too high, so if that move down continue, your losses accelerating. So we have to keep them under control. So we do you know already some tools and tricks how to reduce or increase, and in this case we need to reduce our positive delta, and you have to use it, but don't do any adjustments in panic mode. So when market is declining very fast, my recommendation, that we should don't do anything till market stop and start cooling down, because when market in panic mode, it's big discrepancies of the option prices, and if you do anything, probably you will overpay for that. So much better to hold till next day, or my favorite way to do it, I do it before market open, when it's liquidity little bit less than in during market hours, but because at that time market is pretty stable, it's much easier just to set up your order and wait for 15-20 minutes, and usually if it's not executed, you will correct it a little bit, give up just a quarter or so, and it will be executed. So keep your delta under control. This is the most important thing probably right now when market declining. And again, don't panic. You see that just for this week, market didn't go up pretty much. It's still in huge falling mode. So, but our account bounced up more than 6% just because VIX is dropped down from approximately in maximum close to 30 to 22 right now. So you see how much our potential profit sitting in volatility. So as soon as volatility start going down, our account is going up. So don't worry, just control your delta and do whatever we have to do. If naked puts are under pressure, we have to roll them. We have to pay for that roll with hedges if we have them. If we don't, we will borrow that hedges. I show you already in Discord how to do that. So we will be okay. Don't panic. Thank you very much again, guys, and have a good weekend. Bye bye.